All right, it's Monday. Let's talk about gold. Let's look back. In one of his writings, a leading English art critic of the Victorian era, John Ruskin, told the story of a man who boarded a ship carrying his entire wealth and a large bag of gold coins. Now, when a storm hit a few days into the voyage and the decision was made to abandon ship, the man strapped the bag around his waist, jumped overboard, and sank straight to the bottom of the sea. Now, the man's body was found with the wreck of the ship many years later, and reflecting on this, Ruskin asked, now, as he was sinking, had he the gold or had the gold him? Now, I'm telling this story to emphasize the enduring value that gold has held in the minds of people throughout the centuries. It's represented not only a store of value, but a means to an end. And any end, evidently, including one that ends at the bottom of the sea. Now, for much of Western history, gold has been synonymous with money. Listen closely to the characters counting their money in the classic Gone with the Wind.
Look, Miss Mead, it's a great deal of money. 10, 20, 30, 50. And it's not our paper money, it's gold.
She was way more excited about the gold. Now, it wasn't so long ago the United States and Europe fixed their currencies to gold, and despite the free-floating currency regime that we've had since the end of Bretton Woods in the early 1970s, one could argue, as some have, that we are still on a de facto gold standard and that the market for gold is reacting to the ongoing debasement of paper currency. After all, gold has been rising steadily and at times rather frenetically since 2001, when it was trading at below $300 per ounce to levels near $2,000 in the past year. Now, there are those, like economist Nouriel Roubini, who have been calling it a bubble since at least 2009. Now, one of the good things about markets is that they tend to have their own minds and don't care too much what academics or policymakers think. But even if markets don't need policymakers, policymakers still need markets. And the gold market in particular is one that central bankers keep a close eye on. Gold, as our guest James Turk recently said in an interview with us, is the messenger. And what it's been telling us is that people don't trust governments, and they definitely don't trust central banks. But how far are governments, central banks, and their too-big-to-fail handlers willing to go in order to silence the messenger? That is the question. Is market manipulation by governments real? And if so, how's it being done and where? Here to help us answer those questions is Bill Murphy. He's chairman of the Gold Antitrust Action Committee and veteran of the commodities industry. He's here to talk about it with us. So first, Bill Murphy, welcome to the show. Thanks for being on.
Great to be here, Lauren.
Now, as I said, let's start with something real basic because you are a veteran of the commodities industry. You've been cited by people throughout the precious metals space on this issue, your work. So I just have a simple question. Do you think that gold is in a bull market still?
Well, it's been in a bull market now for 12 years, and I don't think any asset class has ever done that before in history. And it's going to keep on going because we'll talk about this gold cartel, which consists of the bullion banks, the Federal Reserve, the Treasury, the BIS, Exchange Stabilization Fund, are just trying to slow the ascent down so it doesn't stand out too much, create too much excitement. I call it a managed retreat, and that's what's going, and that's what's going to continue on for years to come.
Well, how long do you expect the bull market ultimately to last?
Well, it depends on how long that the gold cartel sticks around and when they let great gold trade freely, because they have to. We had a conference in the Yukon called Gold Rush 21 in August of 2005, and back then when gold was $436, I thought it would take $3,000 to $5,000 to clear the market. It was jumping up and down about it, and we got to almost 2,000 last year, and I think we'll hit at least $3,000 to $5,000.
$3,000 to $5,000 before it goes down?
Well, at least. I mean, it could go much higher than that. All of a sudden, now my stuff that I talked about in 2005 looks pretty conservative. And I think if they continue printing money the way they're doing, as you mentioned earlier, 3,000 to 5,000 is a layup, and then we'll see where it goes from there.
That's interesting. I want to talk a little bit more about the reasons behind this bull market for more than a decade that you were just talking about. Is this about the fundamentals of the supply of paper money to physical gold, or is there a larger psychological trend or trends that are really at play here?
Well, good question. It's actually all of those things. It's about the psychology. It's about inflation. It's about the supply-demand situation. Back when we first got involved in understanding about this manipulation in 1999, the Chinese weren't that active. The Russians weren't that active. The central banks weren't buyers like they are now. Matter of fact, 3 to 4 years ago, the European central banks were selling 400 to 500 tons a year, and now they're gulping about it, and they realized they were conned, I think, by the rest of the people in the Gold Cartel, and now the supply is much less than people think.
And, you know, I want to get more into that manipulation story and the cartel, as you call it, in a little bit. But I do want to stay on this issue of why the price has done what it has over the last years. And one other question I have for you is about property rights. Because one really good example of this concern over property rights is something that I've heard from a number of investors in the wake of MF Global. Investors with MF Global literally were told that their money had vaporized in the bankruptcy of that firm. So to what extent is people's moving to gold, to physical gold in particular, a reflection of people's concerns about property rights and the safety of their money?
Well, even when you have gold as a part, that's a very good point. I'm appalled about the CME would ever allow this to happen. They claim that there's never been a default, and they were so proud of it over all these years, and yet these people have lost their money. So, yes, gold is a safe haven. It's where people should go to, but it's also where you have it. There's certain ETFs that are very shaky in that regard. The GLD, the big one, where HSBC is the custodian, where JPMorgan is custodian of SILV, the big silver ETF. They're the major shorts in each market. And you can contrast that to other ETFs where that's not the case, like the Sprott Asset Management Group has.
Well, that's a really good point. You brought this up, so I'll ask you about a question I did have. One of the reasons to own gold is that it's not somebody else's liability. So what is the reasoning or the rationale behind gold ETFs for investors?
Well, my contention would be that they're a little different. And for example, that we don't know what the HSBC could be doing with their gold in GLD or Morgan with SLV. There's nothing in their charters, their agreements, that precludes them from lending it out, putting gold and silver in the market. We just don't know. So where you have it is key.
So then let's talk a little bit more about the manipulation of this market, because there's governments and there's big banks and there's markets, and kind of in the middle of all of this is the central banks. And they know something about perception, and they are sure concerned about it. And one issue that above all they might be considering is the perception of the currencies that they are overseeing. So this gets into the argument about manipulation. One of the things that people like yourself, other guests we've had on this show, argue is that there is manipulation going on in the gold market, in some other precious metal markets too, with some of the big banks, the big bullion banks such as JPMorgan and HSBC. So what is your reasoning for this?
Well, think about it. Every time gold shoots up quickly, what is the talk in the press? What do you hear? Is it something about a crisis, a dollar problem, too much inflation? It's bad for business. It's bad for the politicians. It's bad for the big banks. And so that's why they go all out to keep gold under control. As James Turk said, it's a barometer of financial health. And they don't, when it shoots way up, it's negative for what I just mentioned. So they don't want the price to move up to reveal what's actually going on.
And so then there's the reasoning as to why they would want to do this. Now, what is the analysis or the evidence that makes you believe this actually is going on?
Well, it's funny, you know, it's like a murder trial. You know, we got 100, 200, 500 things that would show that the accused is guilty beyond a reasonable doubt. And if you put it all together, we've been putting together evidence since 1999. It's overwhelming. There's so much stuff on the public record, and if people are interested, they can go to GATA.org. It's all there. It's plain as day. Paul Volcker in his memoirs said one of the biggest mistakes he made was what he didn't manipulate the gold enough and suppress it enough. And the people since him have taken over the role, which started really big league with Robert Rubin when he was Secretary of the Treasury.
Can you maybe just summarize then kind of what the most glaring evidence of it is, or how this works now in the way that you see it?
Absolutely. And the most obvious things for the people that watch your show is how the market trades on a day-to-day basis. It's always counterintuitive. Black is white, white is black. Just when gold should go up the most, it gets hit. It gets hit around certain events like an option expiry, like JPMorgan did to silver just the other day. Now it's over, and watch silver move right back up again. They attack at certain times of the day. The most obvious is about 3 a.m. New York time when the London gold card traders go to work. We call that Plan A. I don't know, it must have happened 3 out of 5 times a week for the past 6 weeks.
Mm-hmm. And how does it work between the central banks and these large banks like JPMorgan and HSBC that you believe are doing this?
Well, they need some gold to dump on the physical markets or silver. Mm-hmm. But what they usually work is at strategic times, like I mentioned, where they go in the derivatives market and bomb the futures market in a matter of seconds. Today, they hit gold, I think, something like $14 in a minute or two. Mm-hmm. For no reason. There was no news. Mm-hmm. And that's when you know that they're going after stops. They're trying to get the speculative longs out of the market. And that's how they play with it. And they do it over and over again. But because the supply-demand situation is so much against them, all they can do is manage the retreat.
It's interesting. You know, I want to keep you on. We're going to go to a quick break. When we get back, we're going to talk about what impact this maybe has or opportunity this is for the central banks who have been stocking up on gold. So just stay right there, Bill Murphy. We'll have more with you in a few minutes. He's chairman of the Gold Antitrust Action Committee. Welcome back. We're talking with Bill Murphy of GATA about central banks involved in manipulating the gold market. I should also note that central banks have been accumulating gold. Reserves have increased by more than 500 tons over the last 2 years, driven by the developing world. That's according to the World Gold Council. We've seen central banks load up in general, and recently Mexico, Russia, Turkey. In March, numbers that just came out from the IMF. Now, the World Gold Council believes China's central bank also has been making purchases and made significant gold purchases in the final months of 2011. So what's going on here, and are they possibly getting an advantage, allowing them to buy on the dips? We're going to ask Bill Murphy, chairman of the Gold Antitrust Action Committee and veteran of the commodities industry. So, Bill Murphy, these banks that have been loading up in conjunction with the manipulation you allege that some central banks want to protect the perception of their currency, is that an opportunity for these central banks that are loading up, and are they perhaps buying on the dips?
Absolutely. They know what the Gold Cartel does, and they know how they bomb the market, and they're waiting for them. Just recently we were told that there were these huge banks, including China, central banks ready to buy gold between 1620, 1645, and we've had these recent attacks, these waterfall attacks down, boom, and the markets come right back each time because all that buying is there. I know this for a fact because the Russian central bank knows all about GATA. He mentioned Oleg Mozikov, the #2 guy there, mentioned us in 2004. The only words he mentioned in English at this big bullion conference, which stunned the crowd, was GATA. Andrei Bykov, who is an economist that worked closely with President Putin, has come to 2 of our conferences. Loved it. After the first one, he was there. The gold market was dead. 2 days later, it exploded out of nowhere. They've been all over it. The Chinese have followed us closely. I've had 3 conference calls with their sovereign wealth fund, the Chinese Investment Corporation. We were the first ones that noted Chinese buying 5 years before anyone else, and noted it every few months for all that time till it was announced. So they know what the Gold Cartel has done and why, and they want as much gold as possible before things blow up.
That's interesting. So when they come to you, do they kind of say, hey, we want to get more information into gold manipulation? And is that what they're asking for and looking for?
No, but you probably know the Russians and the Chinese, they're not going to say anything. They just listen. But and that's the most important thing, is they keep coming back for more information from us. Okay,
and Bill, what do you think this is about, this accumulation of gold reserves? Is this because perhaps you think that some of these developing countries could be looking to introduce a new reserve currency, possibly backed by gold? Or do you think they're just maybe trying to increase the size of their holdings to be on par with the U.S. and some European countries?
Well, I think it's only natural for them to want to grow their reserves because they get so much dollars. Look at the Chinese. I mean, they've got these hordes of dollars. They know what we're doing. They know how we're printing money. And this is their way to get some protection. I know when we had our conference in South Africa, I heard that the Chinese were all over that country and over Africa building up their different reserves of different kind of metals a long time ago. They know what's coming, and they want some protection of it. At the same time, they can't dump all their dollars at once, and they don't want to.
Do you think any of this has anything to do with any kind of gold-backed currency, possibly?
It's possible. I mean, there's some talk about that, and there's talk about other countries that are using gold as part of their transactions, and there's talk about other currencies, you know, forming different unions and not using the dollar. And of course, this is what the United States is desperate to prevent, which is why they're all over the gold price.
That's interesting. And when you're talking about the manipulation of gold, who are the names that you would give of countries or central banks that you believe are involved in this? You mentioned the United States. Is there anybody else?
Well, the Bank of England is involved in it also, but the big one is the United States with the Fed, Treasury, again, Exchange Stabilization Fund, certain bullion banks like HSBC, JPMorgan, Goldman Sachs. You mentioned the squid. They were the ringleader till about 3 or 4 years ago, and they have just completely disappeared from the scene. So they're gone, but it's just that combination, of course, and then they have allies and other central banks to help dump some gold on the market. As I mentioned earlier, I think the Europeans got duped, and now they're gulping because they're not selling any more gold at all, while other countries are buying, as you mentioned.
And now, one thing I do want to ask you about, you mentioned JPMorgan several times, and they really have gotten a lot of flack for what people believe is manipulation of the silver market. And we did actually hear from Blythe Masters, the head of global commodities, answering a question about that. And she defended it, saying that they're hedging. She said that they're hedging positions that they have, and that speculative bets aren't part of the business model, and that market participants don't see all of their activity, and bloggers have a misunderstanding of the nature of the business. There's an underlying client position. We just have a minute here, but do you buy that?
Well, let me put it this way. We testified in front of the CFTC 2 years ago and got a statement from Andrew Maguire in which he showed that he had sent emails to the CFTC saying when JPMorgan was going to bomb the market ahead of time, and how they alerted their allies what was going to happen. This happened over a 3 to 4 month period, and it happened. The evidence, smoking gun, was right there. The CFTC has done nothing about it. When it comes to them hedging, that's hogwash. It's just not the way. We've asked the CFTC to confirm that these are hedges, and they won't do it.
Aha. Take that, Blythe Masters. It's hogwash. Thank you so much for being on the show, Bill Murphy. It was really great to get a chance to talk to you. He's chairman of the Gold Antitrust Action Committee.